Hello friends, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily stock market analysis show, and we had a monthly expiry for the May 2022 today. The banks were showing great strength and it was highly volatile V-shaped moves that happened in the bank in the indices, right? So let's get into and see how could we plan for May 27th, tomorrow, Friday 2022. So as usual, the pre-market analysis for the next day would be based on all these technical parameters that you see on the screen, more on the left and the right side. We'd have some data analysis based on parameters that you see on the right side. We'll wrap up some actionables as well. Right? So here is the chart. What you see here is a hammer, right? It's a hammer pattern. Hammer patterns when appearing during a downtrend will indicate there is a reversal that possible, potential reversal. I mean, if it is appearing on the top, there is a potential reversal from the top to the down. That's possible. So right now it is some kind of consolidation that is primarily happening. But overall, if you see, it's in the downtrending place where the hammer is coming. So potentially, ideally it should have been at the very bottom of this rally. So it's not that, it's somewhere in the after it's good bounces happened is where you see. So it may not have any significance sometimes, but anyway, this big size that you see of the hammer is looks like a hammer because the big size indicates that there is buying pressure from the downside. So that is positive regardless of its significance of a big up move or not, right? That shows that there is strength, there is support downside there. That's what you see in the Nifty. Banknifty, you see, is a breakout. So it's 14 days candles that you see here, and we have a gap resistance, and today it's closed clean, right? So that shows that the gap is a major, this gap acted as a major resistance and it's cleared. Even otherwise, Banknifty is showing from all other parameters as bullish, and yesterday also this long build up that happened if you just saw, and today it did its job. It closed the gap and then showed a wide range bullish. So what happened in Intraday? Intraday, this is what happened. V-shape, half a percent up move, 1% up move in Banknifty, half a percent on Nifty, and then TIM as a downside 1.5% down move, and almost it recovered the entire thing and then even went further up, right, nearly 2% of up move. But look at Banknifty, the same V-shaped recovery happened, but the dip was less. And the up move was very big up move that happened. So this is a price action that happened, but today is an expiry day. People get in the trades expecting decay to happen on either sides, and many of them might have lost the money if they don't know how to quickly adjust and reverse the positions, right? Because sudden reversals hit your top stop loss on either one of the side. And here we had interim dip also in between, so that also might have triggered stop loss if you're trading on intraday and lower time frame. So that's the price action today. Overall, if you see Bollinger Bands, you can see that there is a bend that has happened on the downside. Banknifty also bent. So that bend indicates what? It indicates clearly that there is consolidation. Now the down move is probably over, and let me take some rest, right? So if a consolidation continues, slowly this cues of the volatility will happen, and then it will narrow down, and then it will decide whether to move up or not, make an up move or down, right? So the volatility will slowly reduce if this consolidation that's happening. So a clear consolidation beginning of a consolidation is what you see on both indices from the Bollinger Bands. That's what you can understand, right? The bearish is still there, downside expansion has already happened, that's clearly visible, but it is taking a pause, or moving sideways. So let's see, 144 points gain, nearly 1% of gain in Nifty, hammer pattern. Banknifty is 755. Look at the gain. It's 1%, and this is 2.2% of Banknifty, right? Good move, wide range bullish candle, and that it was a breakout of a multi-tested, at least 7 times tested gap is what was clear today, which is very positive. Intraday was V-shaped. We have seen that. Bollinger Bands, we know what it is in general indicating, but we also know that it is a sideways consolidation beginning that you can see. Let's look at the support resistance. The immediate support now would be 15,950. That's 961. No, 850, 950. That's all. If that breaks in 15,500, 15,650, which is a previous swing low here, and then 15,350 to 15,450, and then 15,000 downside. Similarly, the resistance upside would be 16,100 and 300. That zone, right? The resistance can be there. Above that, you have 16,350, 450, which is Fibonacci 50. And above that you have 16,550, 650, 15,700. But there is another gap. No, the next gap is not another gap. It's the first gap for the Nifty. The Nifty has not cleared that gap yet. That's at 16,550, 650, and then 16,700, 16,750, and then above that 16,800, 16,900, which is Fibonacci 38. And then rounding number 700. You have another gap resistance that's appearing at 17,400 levels, right? So a lot of resistance on the upside, but consolidation is what you see basically. Banknifty levels, somehow it's not visible to me that much, so I'm just going to the Banknifty charts quickly and then looking at the levels, right? So what you see here is the immediate support would be 34,350, 34,750, right? And if that breaks 33,600, 34,100, that's a Fibonacci 61 retracement level supports. If that breaks, we have 33,000, which is a major support zone, which is some kind of swing low, and the major swing low comes at 32,150, that kind of levels, and before that you have 32,400, 32,800. It's also a support zone. So after that you go to 31,000 kind of breakdown levels. No, that's the levels on the downside. Upside resistance 35,000 is crucial. Fibonacci 30 today it hit that and cleared, and then it pulled back a little bit. So 35 Fibonacci 50 retracement level, 35,300 up to that level is there. Then 35,600, 35,900, then 36,300, 36,800 is Fibonacci 38. Above that you have another gap resistance. This gap is history, downside gap. Now the next gap is at closing at 37,500, Fibonacci 23. That's what you have to look out for, right? So that's the support resistance. Let's get back and see the momentum. Momentum is sideways. You can see that Nifty had a range shift bounce, which is yesterday we talked about this range shift concept in the RSI, which was bullish. I mentioned that, and exactly like that today the bounce of up move has happened. So still in the sideways zone after a range shift on the daily charts, and momentum is rising clearly, but in the sideways zone on the Banknifty also, and sideways on the medium term also in both indices. So momentum sideways trend. Crossover of the trend has happened already yesterday. Today it is clearly visible on the Banknifty from the bearish zones with DMI positive zones, right? Some bullishness is back. Trend is slightly reversed in the short term on the Banknifty, but Nifty does not happen yet, right? And remember, both we had a bend on the ADX, which indicates that the strength of whatever bearishness or bullishness is there, that is reduced. That's falling. So that's the picture. Medium term is to continue to be bearish, right? So the trend reversal has started, you can say. India VIX cooled a little bit yesterday, and today we had big shift down. 10 points, 10% has shifted down, and 22.7 is where the India VIX is there. Volatility is still there, about 20. You have to be cautious. Blood volatility is 21.3, and volatility percentile for the 52 week is 82.8. So it's cooled off from the 90 kind of level. So VIX has cooled off, but there's an expiry day, and we don't know. All the uncertainties are still there. I think it's changed as such, but it has cooled off a little bit today. And this is for the expiry of June 2nd weekly expiry, the upcoming. So the figures that you appear here, the levels may not be very much significant because active trading of these levels may happen only from tomorrow. But anyway, for reference, you can see that 14,500 and 17,000 is where the highest put and call writing is. 15,000 and 16,500 is the second highest put and PCR is bullish. Long build-up is what is in the futures interest. Banknifty 34,000 and 35,000. 35,000 is also where the second high. So 35,000 is where the highest put and call writing is happening. So 34,000 to 36,000 is the range, and put call ratio is also bullish and long build-up. So overall, as of now, put call ratio and futures are showing bullishness, and levels, there's not much clarity. Very wide range writing is what you see. So it may not be very much significant. So please ignore these levels as such, especially since the monthly expiry has happened. Things will not be that much clear in the very beginning of the first week. Look at the heat map of Reliance did not do well. Rest everyone had done its job, right? So IT stocks are green, HDFC Twins are green, ICICI Kodak Bank is green, Tata Steel is green. So all the sectors have performed that, right? That's what its heat map shows. Now HDFC Twins, both of them are green, and HDFC Bank has managed to climb above the previous resistance zone from where it had slightly slipped down. And both are sideways and rising momentum. Trend is about to cross over, so the struggle is to get back into the bullish zone. So once it reaches there, then we can have a look. Right, the key point is that for HDFC would be to climb above this resistance, and HDFC Bank would be to stay above this support zone from where it has climbed now. Lands some retracement after some good bounce that has happened. Momentum is bent a little bit, but in the sideways, not in the bearish zones yet. Right? Yeah. So the IT index, the IT sector enforces two stocks is what you see, Infosys and TCS. Some greenery is there today, but remember it is in the bearish zones of momentum. TCS also is on the edge of a channel, has given up a long resistance level, and then I'm trying to come back. So it's an inside bar, but it's a green inside and it's an edge. You have to keep a close watch. Momentum is still in the bearish on both, so keep a close watch whether it's able to consistently shift the momentum from the bearish to the bullish and climb above this resistance from where it had slipped down. These two banks, ICICI Bank and Kodak Bank, have done well. It's at a resistance, Kodak Bank, so momentum is in the bullish zones actually. So if this resistances that are there immediately above is clear, means that it can give breakout, right? But HDFC Kodak Bank has been performing last level bit. Now there is a chance that the momentum could retrace back and then settle and take a support and then bounce from here. So some retracement may be required before it can break this resistance level. ICICI Bank is also bullish rising momentum, but remember there is major resistance not cleared that. So green close above that, it may be time for a look at bullishness in the ICICI Bank. As of now, it's still sideways but rising momentum and dealing with the resistance that is immediate. These are all short-term daily charts. So heavyweights, if you see, right, orders are trying to get in the bullish zones. Banks, IT is also trying to get in the sideways zones at least. Lens is consolidating sideways. Sectoral performance, if you see, it's a mix. It's a mixed bag. Pharma and FMCG did not do well. Others are all up. 1.3% up. IT, metal 2.6% up. Auto nearly 1% up, and realty also 1.4% up. So all up moves happened today except for the pharma and FMCG. And if you see, the sideways momentum is maintained by auto, right, which is the most bullish, and then FMCG. So these are two sectors that are having sideways momentum in the short term. Rest is all having short-term bearishness. So top-down approach of picking up the stocks from the performing sectors probably if it gets into the bullish one at least on the short term, right? So have to wait for that moment to pick up, catch up. Institutional participation, FA has been selling, nothing but selling. DIs have been buying, nothing but buying. Right? So same thing might have happened today. The latest picture is not clear yet. The data is not published. We'll fresh and see what happened. 25 whole data has come, 26 data has not come, so I will see that later. But it is very obvious that a big amount of DI buying might have happened. FIs might have usually sold at the same range of 1000 to 2000 range. So currency, if you see, dollar index has cooled off, has retraced after making a breakout of 17-year high. It has cooled off. Momentum is still sideways. And USD in our currency pair is weakened further. Rupee is weakened further today, but basically it's consolidating below the 77.5 kind of level since last many days, right? So rupee at very low level. Momentum is picking in at the top all-time high levels is where it remains, which is not great for market or economy. US markets, if you see, Dow Jones shows some bullish moves the last 2 to 3 days. Just climb back the momentum into the bullish, into the sideways zones at least. Remember, it had slipped down from the major support zone earlier, and it's in an attempt to climb back there. Nasdaq is weak. You can clearly see it is still in the bearish zones, attempting to get into the sideways zones. We have very small body candles. It had slipped down from the major support of 12,900 kind of levels. S&P 500 also is showing good Dow Jones like moves of up move to move upside up at the edge of its channel and managed to be there in the sideways zone. So whether it will remain there, rise up from the sideways zones, or these are things that you have to watch closely, right? So our market is closely connected. As I say every day, when there is a big move, either upside or downside that has happened in the US market, same thing will reflect in our market the next day. So pre-market, you have to just check what happened there. Our markets will open like that and perform like that. So if it's a small move or a flat move, then it may not impact. We'll take our global cues. But when the US market has made big move, 300, 400 points down, then we don't, all the technical analysis goes for it was there. Crude oil is again another green, 110 above, very bad. So there is no hope for that coming down below 100 any time in the future is what it seems like, right? Momentum is rising, momentum is sideways actually. Gold is seems like it has given up with two red candles after showing some momentum to move up, right? Looks like it's finding some resistance on the upside. It's in the sideways and falling momentum. So gold is not breaking out even when the market was crashing last week. No, that is something to make a note of. So two long calls. One is Dr. Ladies Labs and one is Ashok Leyland. Both are long. The weekly chart is what is shown, but swing trade is what I would look for within 2 or 3 days. It could give a breakout. Sometimes it could be slow. This is a weekly chart, so it takes time. So entry has to be done by considering the weekly, and weekly will give you a good picture on where the price is moving around. But entry is made on lower time frames. So both of them are showing cup and handle breakout, right? So one is broken out and then closed just above the neckline. Another one also doing the same. So if this works out, it could clearly give very good boom. The breakout works out, right? It can also be a positional trade as well, right? The one which lasts for 2-3 weeks. Right? That way also it can work. But have type stop losses according to your capital size. But cup and handle on a weekly form only gives good moves, right? Only thing you have to be patient. You may get stop loss, but you can re-enter. So stop loss would be the neckline of the breakout zone is where you have to put wherever the price is the neckline, right? So that's two stocks on the long side, Dr. Reddy Labs and Ashok Leyland for swing long trades. Wrap up is that mild bullishness. Yesterday it was mild bearishness. Today I have a view is mild bullishness. The reason is banks are showing great strength. Consolidation is what Bollinger Bands is showing. And a gap that is long tested multiple times was clearly taken away together with the banks, and that hammer on the Nifty also is positive. So some kind of consolidation, small up moves kind of things can happen in the next days. And this market view is based on the momentum study, the trend study, the volatility study, the chart patterns, the resistance support levels, all of this. The confluence of all of this is what I have come up with the idea. So the global cues are not great. Our interest rates, inflation is rising. Our rates are interest rates are hiked. US inflation is historic high. Our US Fed rates are even. Another hike may come in the coming days. FIs are aggressively selling. Crude is bad. Very high price. And we have weak rupees. So all of this. And the war is going on still. Right. So we have high volatility. That's why it's not cooling off below 20 bigs. It's still about 22. Positivity is that retail has increased confidence in the stock market and money is pouring into mutual funds and DAs are buying, but FIs continue to sell, and all the uncertainties are there in the market, so you have to be very cautious. All we can do is two things: cut short your position size when the VIX is above 20, and rest is always have overnight positions hedged with risk define strategies, especially if you are trading options, right? So that's all we can do, right? Manage the risk. So we had a very volatile expiry today, right? So we don't know this levels will sustain or not, right? But overall it looks like it may sustain because bank shows some strength, right? So the levels all we know is the levels that we have talked about. Keep a note of these levels. The market will do as it likes, right? So we have to look at only the levels, upside and downside. So if it moves upside, we do that. If it moves downside, we do this. That's all we can do, right? And how much to do? Position sizing, risk management, right? So I hope this helps. My view is mild bullish for tomorrow. you can hope this helps you to frame your own view and trade plan for the next day. If it helps you in some way, consider hitting the like button and share it to maximum. If you're not subscribed right away, please subscribe. We have very few subscriptions. I appreciate your help in this regard. Thanks so much for watching. Happy trading, happy learning. Bye.